Have you noticed something strange? The news says inflation is falling, but when you go shopping, everything still feels expensive. Groceries, rent, gas, eating out. So, what's really going on? If inflation is slowing down, shouldn't prices come down too? That's what most people expect. But the economy doesn't work that way. And once you understand this, everything starts to make sense. First, let's talk about what inflation really is. Inflation doesn't mean prices are rising. Inflation means the asterisk speed asterisk at which prices are rising. Think of it like a car. When a car slows down, it's still moving forward, just more slowly. Prices work the same way. Even when inflation falls, prices usually don't go down. They just rise more slowly. A drop in inflation just means prices are increasing at a less frantic pace than before. Let's use a simple real-life example. Imagine last year your weekly grocery bill went up by 10%. This year, it only goes up by 3%. That's great news. Inflation is lower, but your groceries are still more expensive than they were 2 years ago. Prices didn't fall. They just stopped rising as fast. That 3% increase is being added on top of last year's 10% increase. So why don't prices come back down? It's because businesses adapt to higher costs. Think about it. When a company's expenses for materials, shipping, and employee wages go up, they raise their prices to stay profitable. Once those higher costs are baked into their business model, they rarely lower them. It would take a huge drop in demand or a serious economic downturn for companies to start slashing prices across the board. Now, here's where things feel really painful. The salary problem. Prices tend to rise fast, especially during periods of high inflation. But salaries and wages, they usually rise much more slowly. So even if inflation falls from, say, 8% to 3%, your income often hasn't caught up to the price hikes that already happened. This gap is why it feels like your money is shrinking and your purchasing power is weaker, even when the news says the economy is improving. You're stuck paying yesterday's high prices with a salary that hasn't kept pace. Another reason everything feels so expensive is the hidden effect of the past. The high inflation we experienced over the last couple of years didn't just vanish. It permanently raised the overall price level of almost everything. When inflation falls, it doesn't erase that damage. It just means things aren't getting worse as quickly as they were before. The new higher cost of living is here to stay. This is why economic news can feel so disconnected from our real lives. When experts and news anchors celebrate that inflation is down, they mean prices are rising more slowly. But what most of us hear is things should be getting cheaper now. This fundamental misunderstanding creates a lot of frustration and confusion. We look at our receipts and wonder why the official numbers don't match our daily reality. So, what does this actually mean for you and your wallet? It means the economy might be stabilizing, but your cost of living is likely to remain high for a while. Real financial relief for most people doesn't just come from lower inflation numbers. It comes from other factors, like higher wages that outpace inflation, more affordable housing, and overall economic growth that makes goods and services cheaper to produce. The key takeaway is this: falling inflation doesn't mean life gets cheaper. It just means prices stop getting worse as fast. Once you understand this core concept, the economy and all those confusing news reports start to make a lot more sense. This is Money Stories, where we explain finance and economics through simple stories. If this helped you understand money better,